The AI infrastructure trade getting hit hard in the sell-off. NVIDIA down nearly 4%. That's despite some posts over the weekend from some of the biggest players touting red-hot demand for their AI products. Our Deirdre Bosa has more in today's Tech Check. Morning, Dee.
Hey, good morning, Carl. It really does seem like no amount of bullishness from really the biggest players in AI seems to be convincing investors to buy back into the hype. Over the weekend, OpenAI's new image generator continued to see huge uptake, leading Sam Altman to cap usage and post, "Our GPUs are melting." Then there was Elon Musk. "Servers are running hot," he said, as Grok responded to a user that it's feeling stretched because of high usage. Finally, Google Gemini released Gemini 2.5 Pro on Saturday and posted, "Our TPUs," that's their custom AI chips, "they are running hot." In short, they are all saying that they cannot meet demand. And yet investors are unmoved and more tuned to the bearish signals, like CoreWeave's disappointing debut, down again today. Alibaba Chair's comments last week that people are investing ahead of demand, or NVIDIA at the lowest level of the year today. Now, another reason that I've heard for the skepticism in public markets is that there still isn't a killer app to justify inference demand. But at the earlier stages, the app layer, it is taking off, and money is pouring into companies like Perplexity and Cursor, which used to be known as AI wrappers, but they're going deeper and they're building larger moats as model costs come down. Cursor, for example, you might have heard of it, is the hottest thing in tech right now, an AI-first coding startup, which is all about the vibe of collaborating with an AI co-pilot. It's an experience where AI is deeply integrated into everything it does with contextual awareness versus, say, Microsoft's GitHub Copilot, which is still essentially a suggestion engine bolted onto coding platforms. It's not AI native. Cursor's parent company, AnySphere, is reportedly in talks to raise fresh capital at a $10 billion valuation. And get this, guys, its annual recurring revenue reportedly surpassed $200 million this month, making it one of the fastest growing startups ever. So in other words, the ROI, the return on investment, is increasingly showing up at the app layer, while foundational model companies continue to search for theirs, and they spend ever more money on GPUs. So the contrast here could not be clearer. Private markets, they're betting on AI applications, where public markets, they remain wary of infrastructure spending outpacing real demand. It could suggest that the next wave of AI winners will be companies proving out use cases with clear revenue potential. And guys, that's the topic of our latest Tech Check take, rise of the app layer. Check it out by scanning this QR code or on YouTube, publishing in just a few minutes. But guys, this trade, it's shifting to different areas of this market.
Rise of the app layer. I'm gonna have to tune into that one. That sounds really interesting for a deeper look. Deirdre, thank you so much.